Welcome back. Today, I want to talk about my plan for building a $100,000 stock portfolio. Hopefully, somebody out there who's also looking to build and grow wealth in the stock market, maybe your current goal is $100,000, can also get some value out of the video. We're going to kind of go over why I want to build $100,000 because I think it is important to understand why. You're going to be putting a lot of time, a lot of energy, and a lot of effort into doing this. So it's worth thinking about why, even though it may seem rather obvious. We're going to talk about some of the essentials for success and then what the actual plan might look like. And if you're watching this video or if you're researching videos like this video, you're definitely already on the right track. And you know what they say, the first $1,000 in the stock market is your hardest $1,000. The first $10,000 is the hardest $10,000. And that goes for any dollar amount. The hardest 50K is your first 50K. So hopefully, I'm currently sitting at 4,800 or 48,000, sorry. And hopefully it takes me a shorter amount of time to get to 100,000 than it did, or for me to get from where I'm currently at to 100,000 than it did from zero to now. That is the goal anyway, unless things go drastically wrong, which they could. It is the stock market. You have to be prepared for everything. But yeah, let's get right into it. Unfortunately, I am still a student. I did work for a few years before going back to school, which is where pretty much all of this money came from and how I was able to contribute $42,000 to the account so far. But so it might take me a little bit longer. I still have a year left of school. And then, we're coming out of school, we're right to the nose, to the grindstone with contributing as much as I possibly can. And I still try to contribute to the account. I work a part-time job, but it is harder to build out a portfolio while you're in school. So all of the students out there listening to this, I definitely relate to you. So why do you really want to build a stock portfolio? Is it because you want to sell all of it when you hit a certain dollar amount and buy a house? Are you saving for a certain car that you want? Are you just looking to keep your money in the market long term and grow it for retirement? What is your why? Do you want to have a certain level of financial freedom? Do you want to build $100,000 portfolio so you can then go on and build a $200,000 portfolio and then, extrapolate that out and reach 1 million, 2 million, 5, 10 million? Because that is my long-term vision for these accounts. And if you also have that sort of long-term vision, then I think my strategy here and understanding what my plan is could definitely really help you. So let's get into it. So as you can see, currently I have around $48,000. And the first thing that I really want to go over is let's look at an investment calculator to get kind of a better idea around what your contributions need to look like with your current starting capital, what rate of returns that you need to get in order to hit that $100,000 number. So this is just a random free calculator that I found by Googling it. I'll leave a link in the description below, calculator.net. So for starting amounts, I'm going to put in, just for the sake of being easy and using round numbers, I'm going to put in $50,000. And let's say we can get lucky and get a rate of return 8% annually. And we can contribute $1,000 at the beginning of each month. And now this is not true while I'm in school. But for sake of the video, sake of, a lot of you out there are probably working, $1,000 monthly should be the ultimate goal of what you can contribute. I know obviously that's a lot, and people out there have lots of expensive, and there's, life is expensive nowadays. But if you can contribute $1,000 a month, and if you can budget for that, you're definitely going to grow your portfolio faster than a lot of people only contributing, say, 100 or 200 a month. So let's bring this down to let's see what 3 years is. So, or not 13. Let's go 3 years. Calculate. Okay. So this is essentially starting today for me. If I look at this, and if for the next 3 years I can get an annual rate of return of 8% and contribute $1,000 monthly, I will hit the goal of $100,000 within those 3 years. And I think one of the important things to note here is that a large portion of your first $100,000 is going to be contributions. It's going to directly come from your ability to save money. And these numbers are a little bit wrong because the $50,000 that I have in my account right now, a portion of that is capital gains, but I just used it as my starting amount. So the total contribution is actually a little bit high, the estimate here, but yeah, the majority of it is still going to be your contributions. So understanding budgeting and understanding, income versus expenses, that's a large part of the plan, and that is essential to scaling your portfolio to the first $100,000. And I encourage you guys to click around this calculator and put in your own situation, use your own numbers that you think are realistic for your level of investing, how much you can contribute a month, and use this as a basis to create a plan. But yeah, the main takeaway here is that a large majority of your first $100,000 in the market is going to be from savings and from contributions, unless you get really lucky and you hit, maybe a multi-bagger stock that goes up thousands of percent. And, obviously you can get lucky and do things sooner. Let's say if we go 4 years and we cut this in half to 500 a month, that's still roughly going to bring you to 100,000. So there's obviously multiple avenues that you can take to get to the same goal, along different time horizons with different monthly contributions and different rate of returns. Like if we do this one with a 10% rate of return, it'll be just over 100,000. So yeah, like I said, I encourage you guys to come use this calculator, understand rate of return and compounding. This is a really important thing to look at when starting to build your own personal plan for building a stock portfolio with a target in mind. Okay, so that being said, what else do I think is essential for this dollar amount right here to turn into $100,000? And there's a couple non-negotiables. One being that you have to be willing to put in the work. You have to be willing to research the companies, understand your positions, understand their business models, understand how they make money, what their valuations are, basic things like what's a PE ratio, what's a forward PE ratio, why are the earnings per share going up, going down, all of those little things, those practical investing, just the practical investing knowledge you have to understand, and you have to be willing to put in the work to understand the numbers that you're looking at. And, you just do the research, read the investor presentations, and try to understand marketing as well. I think that is a good basis because it's a good basis for business. And the more you understand the economy, read books, educate yourself, watch the news, all of those things are going to help in terms of growing a portfolio. And it really is a non-negotiable to building long-term wealth. Another one is, and I touched on this in another video, but, you can't give up. I've gone through periods in the market, like even in the last month or so here, I've gone down a little over $2,000 just in the last, it's even less than the last month, like last 15 trading days. And, a lot of people look at this and they can't they can't handle it. I understand that, this is leading to buying opportunities in the market. And in the past, my portfolio has gotten cut in half at some points in time, 39 down to 35, or that's more like 36. But, when I had less money in the market, I have seen my portfolio get cut in half. And, it doesn't look like that just from this graph because I've always continued to funnel money in it. But one thing that has led me this far is that I never gave up. And one thing that's going to lead me to $100,000 is that I'm never going to give up, and you have to be willing to stick it out when the market is down and, just learn from your mistakes and continue to move forward. Another non-negotiable that I think it's important to keep in mind is that, you have to be willing to change your mind sometimes. You do end up making big bets in the stock market. You're putting lots of capital into certain positions. And let me pull up my tax-free savings quick. So, this is my tax-free savings, and in this account, you make big bets. Like I got almost $4,000 USD in just Metastock alone. And to some people, that's a huge position. Some people, that's a very small position. To me, that's a pretty big one. Obviously, it's a 13% holding in this account. But say something in Meta changes. Say their fundamental business that I currently believe in. I currently really believe in Meta and their mission. Same with Google and Apple and JP Morgan and Nike and PayPal and all these companies I believe in. But you have to be willing to admit when you're wrong and change what you think based off news and based off actual data, because sometimes the underlying fundamental business model changes, and maybe it changes to something that you don't agree with, and that is a situation that might lead you to sell a stock. It's a situation that might lead you to stop buying something or maybe make a position smaller in your portfolio. So that's something that you really do have to keep in mind, is even if you have high conviction on something, you have to be willing to always look at the data, always look at the news, always read reports, and you have to be willing to change your mind. Another thing that's absolutely essential for long-term success and growth in the market is you have to be willing to always be learning. It is kind of a constant thing in the market. It changes quick. Companies change quick, and news comes out, inflation changes, the Fed starts printing more money, the government makes new policies. You have to keep up with new events and new news, and depending on what you're investing in, new technology, and understanding that new technology, and understanding how industries are changing, and understanding how macroeconomics and geopolitics are affecting a certain stock in a certain position. And you have to stay updated, essentially, at the end of the day, which means you have to be willing to continue to learn and read and watch videos and consume content. It's all super important. I read some newsletters, I read books, I watch YouTube videos, I do all that just to, stay updated, make sure I have the same level of conviction in the positions that I hold, and just to make sure that, maybe I don't, or just to make sure that I still agree with the mission that the company's on, and I still have the same belief that they're going to continue on the same trajectory into the future. And all this comes from the willingness to continue to learn. So you have to stay updated. You got to be smart, and you just have to keep learning. It's a never-ending thing in the market. And if you're not willing to do it, you're going to really struggle with maintaining and managing a portfolio long-term. So sorry, I feel like I've been rambling a little bit. Maybe I'll try and do something with the visuals in this video just to try and make it a little bit more interesting, because I've been just kind of talking, which is mainly what I do with these videos, by the way. I just kind of press record with an idea in mind and start talking. But so practically, what do I think are the things that you need to do in order to, turn your accounts into $100,000 accounts? And like I said, when we were going over the calculator, that your first $100,000 is really going to come from contributions, and your ability to contribute to your accounts is going to come from your ability to budget and what your level of income is, how good of a job you have, what expenses you have, and not living an inflated lifestyle if you don't need to. Maybe one day I could make a video going over a budget that I have for my income when I'm working. Maybe you can work a second job. I hopefully will be in a position here pretty soon where I'm working 2 jobs over the summer. I'm just finishing up the semester at school, and hopefully I can land a summer internship here. I'm kind of in some interviews right now, so we'll see how that turns out. But I do plan on working 2 jobs if that works out, just to have a higher level of income so I can invest more. So that's an example of that. Maybe you can cut down on eating fast food. You've probably heard all of this a million times, but spend less when you go out. Order delivery on Skip. Just go buy the food. Try and buy cheaper things. Live below your means, essentially, while you're trying to build your initial foundation, for your net worth. While you're trying to get to your first $100,000, I do think it's important to live below your means and understand your budget and budget for your ability to contribute money into your accounts. It's essentially the top of the funnel. It is your income, and the more income you make, the better. The more income streams you have, the better. This is really before we even start talking about rate of return with the market and picking investments. This is still just your ability to save money. And the better you are at saving money, the easier it's going to be to reach a higher number in your stock market account. The next practical step is to, this is really when your investing knowledge comes into play and your ability to get higher returns and minimize losses. This is where your practical knowledge comes in, like your ability to analyze a specific investment. Like, what specific opportunity do I see in Google? What's the valuation that I think the company can grow to? What are their revenue streams? Why do I think they're going to grow? What is their growth rate projected to be? All of these practical things that when you look on a stock market website or use a stock market analyzer tool, you have to understand all those numbers. Like, how much debt does a company have? How much cash is on their balance sheet? What kind of cash flow do they have? Are they growing revenues year over year? At what percentage? And, it's all those things like that. Understanding all of those things helps you pick better stocks and eventually get a higher rate of return in the market. I'm still new to investing. I think I'm at a point where I have knowledge to pass down to brand new investors, and I've been doing this for long enough to at least speak on it. But there's always more to learn. There's always strategies out there for getting higher rates of return. But once you pair contributing as much money as you can to your accounts with the ability to analyze stocks and pick good stocks and get good rates of return, that's where you can really see growth in your accounts. And once you pair that with, a long-term mindset and 10 years, 20 years in the market where you start to really take advantage of compound interest, that's when your accounts exponentially grow. And, you're not really going to hit exponential growth to get to your first 100 grand. You might hit exponential growth by the time you're making, $2 million. And then maybe the year after that, you make 300 grand, right? Because you have now hit that compound interest and you're experiencing that exponential growth. But like I said a couple times in this video already, the first $100,000, it's probably not really going to come from investment returns, and a large majority of it is going to come from your own contributions, which it might not be a glamorous answer that you were looking for, because it's a lot of work. It's not easy to do. It's possible, and if it's possible, then I'm the type of person that I'm going to be willing to do it, and I'm going to put in the work, and I'm going to stay diligent, and I'm going to do the research that I need. And if you're watching this video, maybe you're that type of person as well. And that's why, we'll be the people that end up with $100,000 in our stock market accounts. The last point that I really want to drive home here, and it's the one that I think is probably the most important in the stock market period, with your ability to build wealth, and that is be patient. You have to be patient. It's going to take years. You can't hop on this boat and expect to be rich in a year. It's not going to happen. You're going to lose a lot of money if that's what you're trying to do. I started doing this a long time ago. I started with $1,000 in this account in 2020, early 2020, before COVID even hit. And, once you get this far into it too, it kind of turns into a game. It kind of turns fun because you know what you're doing, and you just have to be patient. It could take me 2 or 3 years to hit my $100,000 goal. It could also take me 5-10 years. You can't really tell. You can't project exactly how long it's going to take you to get there. But one thing that you can rely on is your ability to be disciplined and your ability to be patient, and stick to your plan of high income, low expenses, contribute as much as you can, do your research, buy the right stocks, and wait. So yeah, patience is key. And if there's anything that you take away from this video, the most important thing is that you have to be patient and just continue to have the goal in mind and work towards that and be patient. So yeah, that is sort of my mindset and my plan for making it into $100,000 in this account. Currently sitting at 48,000. Today was a decent day. What is the profits? What were we up today? Today we were up $451. Not a bad day, honestly. We've been crashing. This is the last 15-day chart. We were over 50. I think I'm gonna contribute a bit more money to the account soon. Hopefully I didn't ramble too much this video. Hopefully you were able to follow that. And yeah, let me know if I left anything out of the plan. Let me know if you have anything that's different in your plan. I'd love to have some conversations with other people that are aiming towards similar goals. I think that could be really cool, which is, kind of why I wanted to start making these videos, is to meet like-minded people and other people that are interested in investing in the stock market. So, yeah, always feel free to reach out and we can have a conversation. Give me any feedback for the video. That's also appreciated. And I hope you guys got some value out of it and have an awesome day.